Hey traders, welcome back to Sam Trading Strategies. Today, I'm sharing a no indicator, 1-minute strategy on pocket option called the 2-candle reversal trap. It's super simple. Spot one big trigger candle, wait for the opposite confirmation candle, then take a 1-minute expiry trade. In this video, you'll see clear buy and sell examples, step-by-step rules, and a quick checklist at the end so you can practice it right away. I'll also show you common mistakes to avoid so you don't give profits back. This video is for education purpose only, not financial advice. Trading involves risk, so always test on a demo account first and manage your capital wisely. If you love simple, rule-based price action, watch till the end to grab the checklist and boost your confidence on the charts. If this helps you, tap like and subscribe so more traders can learn safely. Let's start. Now let's go step by step through the trading rules. This setup is very simple, but you must follow the rules carefully for high accuracy. Rule 1. Spot the trigger candle. Look at the last 5 candles. The 5th candle must be big and strong, much larger than the previous 4. This is our trigger candle. Rule 2. Confirmation candle. Now wait for the very next candle. It must be the opposite color of the trigger candle. If the trigger was red, we need a green confirmation. This means buy. If the trigger was green, we need a red confirmation. This means sell. Rule entry point, important. We do not enter during the confirmation candle. We wait for it to fully close and then take our trade on the next candle open in its direction. All right, let's look at some chart examples. Example 1, buy setup. The 5th candle is a big red bearish candle. That's our trigger. The next candle closes green. That's our confirmation. After it closes, we take a buy trade on the next candle open with 1-minute expiry, and the market moves upward strongly. Example 2, sell setup. The 5th candle is a big green bullish candle. That's our trigger. The very next candle closes red. That's our confirmation. After it closes, we take a sell trade on the next candle open with 1-minute expiry, and as you can see, price drops beautifully. Rule 4. Expiry time. Our expiry is always short and simple. 1-minute expiry only. Don't hold longer. This is a quick trap setup. Rule 5. Avoid bad conditions. Now, very important. Avoid if all 5 candles are the same color. That usually means a strong trend and the trap may fail. Also avoid flat markets with tiny candles, high news events, and trigger candles with very long wicks. So that's the complete rule set. With these 5 rules, you'll know exactly when to take a trade and when to stay out. Before we jump into the live trades, I've prepared something special for you. You'll find the full strategy checklist, all the trading rules, and even the perfect buy and sell setup images in PDF, available on my Telegram channel. The link is in the video description, so check that out. Now, let's test this strategy live on pocket option in both the real market and the OTC market, and see how it performs right now. Here we go. Sell setup spotted. The 5th candle was a big green trigger, and the next candle closed red. That's our confirmation. I'm not entering on the confirmation candle. I wait for it to close and then place a sell on the next candle open with 1-minute expiry. Trade is running now. You can see sellers pushing down from the confirmation zone. If a wick pops up, I stay calm. The rule is 1-minute expiry. No early exits, no martingale. Just let the setup play out. And there it is. The candle closes below entry. So this sell finishes in profit. Remember, not every trade will win, so keep risk small and stick to the checklist. Here we go with a sell setup. The 5th candle is a big green trigger, and the next candle closes red. That's our confirmation. So according to our rules, I place a sell trade with a 1-minute expiry on the next candle. The trade is running now. Sellers are trying to push down, but buyers are still active. I just let the candle play out. No adjustments, no martingale. Because this strategy is always about 1-minute expiry and discipline. And this one finishes out of the money. The reason? My entry was 1 second late, which pushed the expiry to the next candle instead of the planned one. That small timing issue turned what could have been a clean win into a loss. Lesson: always click exactly at the next candle open. If you're late, it's better to skip the trade. Now let's test this strategy in the OTC market, where setups can appear more frequently. Here's a clean buy opportunity. The fifth candle forms as a strong bearish red candle. This is our trigger candle, showing a surge of sellers. The next candle closes green, which becomes our confirmation candle, proof that buyers are stepping back in and rejecting that sell-off. According to the rules, once the confirmation candle closes, I enter a buy trade on the next candle open, with a 1-minute expiry. The trade is now in progress. Notice what's happening. At first, the candle dips slightly, retesting the confirmation zone, which is normal. A lower wick forms, meaning sellers tried to push price down, but buyers quickly absorbed that pressure. As the candle develops, the body stays above my entry line, showing that bullish momentum is holding. This is exactly how the strategy is designed to work. After a big push in one direction, the opposite side fights back, and the next candle often continues that reversal. And the candle closes above my entry, which makes this buy trade a winner. The beauty of this method is its simplicity. You don't need indicators, just follow the sequence and respect the rules. Now, we'll stay patient and wait for the next valid setup. Final setup for today, and we're on the OTC market. The fifth candle prints as a large bearish red candle. That's our trigger candle. The very next candle closes green, giving us the confirmation candle. As per the rules, once that green candle closes, I place a buy on the next candle open with a 1-minute expiry. The new candle starts with a small dip into the confirmation zone, totally normal. We see a lower wick forming, which tells us sellers tried to continue down, but buyers absorb that pressure. As the minute develops, the candle's body holds above my entry line, showing buyer control. And we close above the entry, so this buy finishes in profit. That wraps up today's session. I've put the full checklist, all rules, and the buy and sell setup images in a free PDF on my Telegram channel. The link is in the description. If this helped, please like, subscribe, and share it with a trader who needs simple, rule-based guidance. Trade safe. Practice on demo first, and I'll see you in the next session.